Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's the middle of the week. It's Wednesday morning, but it is also, more importantly, April 2nd, which is, of course, the reciprocal tariffs day. And that essentially, I think, will dictate how markets trade, the commentary, views, everything, at least for the next 24, 48 hours is going to be around that. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, morning folks. I don't know, are you feeling liberated? I don't know who is or who isn't. But yeah, I think we're all fully strapped up, waiting for those headlines to roll in.
Well, that's right. All eyes on President Trump. And by tomorrow, this time, we should have some more clarity, at least. Some more.
Some clarity, by the way, seems to have come in last night. One of the points was, well, how are these tariffs going to be implemented? They're saying immediately.
Yeah, I was thinking about your questions, what you put up on the wall. One of those questions has been answered.
And that is an important question, not in a good way. Because, you know, if they had said these tariffs are going to be implemented in 1 month, 2 months, 3 months, it gives time for negotiation. I mean, the markets would have read it like it was maybe a little dovish, but this is now, immediately. So using emergency powers. But, you know, it's not done till it's done. It's not, it's not dull till the man's spoken. And that's going to be later tonight. I think about 1 o'clock, roughly 1 o'clock, we got exact timings now which are coming through. But about 1:30 our time is when essentially those will start to happen. Now, let's just quickly rewind the clock back to tell you, in terms of what has happened and what you need to know as we start another session. So U.S. equities were down once again, at least intraday. They were down over 1%, but they essentially wiped out those losses. We ended higher. What was the weakness triggered by? There was weak ISM data. And again, I mean, you know, the ISM number once again is showing consumer confidence, etc., is lower. Prices paid component is higher. Once again, that stagflationary kind of a data point, adding to the many that we've had, high-frequency data points, pointing in that direction for the last many weeks now. There was also the job openings data, which was also weak. But while we ended higher, maybe a little to do with positioning. S&P was up about 1/3%. Nasdaq was up almost 0.9%. I mean, names like Tesla, etc., were up 3-4% last night. But pretty choppy day into what Trump has been calling Liberation Day, Reciprocal Tariffs Day, as we all know it. And of course, he's expected to deliver remarks, as I said, 4 p.m. Eastern time, about 1 o'clock or so, 1 a.m. Later today, which is, of course, I mean, Thursday early morning. But we'll, of course, react to this tomorrow morning. Now, the important point is that White House confirmed that tariffs will be effective immediately. And I think that is pretty significant for all the reasons that we discussed. If there was some time given, if these tariffs were supposed to be phased in, which is, well, they're going to do 20, they do 10 now, and they kind of dangle 10 over everyone's heads till, you know, people come and negotiate according to what they want. I mean, you know, it would have been treated and seen as opening gambit, which is maximum, and then you kind of sort of try and walk back based on how negotiations go. But, well, if you say 20 and do it immediately, the room is lesser. And I think that is the implication. But again, I mean, we've heard White House say it. As I said, we need to see it happen to believe it, because we've heard many, many things over the last many weeks now with how these tariffs are going to be. We had, a Fed representative who said that Trump tariffs could raise both inflation and unemployment and basically create an issue for central bank and what they'd want to do. The 10-year was down 3 basis points. We're about 4.22. The oil prices went up again, almost 75. So we had about 1.5% move to just under $75. Dollar was a little mixed as you compare the broader dollar, that is compared to some of the bigger peers. Now, just to circle and tie in the levels. Now, the Nifty's managed to hold on to 23,142 yesterday. That is a number that we put out yesterday, which is a 38% retracement of the entire rise from the 3rd of March low to the recent high, which was, I think, around the 25th of March. So 23,142 is that number. The Nifty broke that, but we ended slightly above it, 20 points above it. So that becomes the first one. And of course, the next downside level then becomes the 50% retracement, which is 22,917 on the way down. Bank Nifty broke below its 40-day exponential moving average. The support zone comes in at 56.41 to 57.95. Basically, it's a gap area. It's also 5641 is also a double bottom. So this is the range which the Nifty Bank needs to protect. And of course, if it does not, the 38% retracement of the same rise that we saw on the Nifty, that stands at 50,390, 5,400 roughly. So that's the setup this morning. I mean, again, it's going to be all based as a bit of a binary kind of a thing. We don't know whether, as I've been sort of calling it, this is a clearing event for markets, a hump to get over, or, I mean, it can still surprise on the downside. And it's possible. I mean, both are possible. So maybe stay on the sidelines at least for today. I mean, you know, for large caps, etc., that FII selling bit is back. And we'll talk more about that in a bit. GIFT Nifty will come up on your screen, which gives you a sense of how we are starting absolutely flat. Like I mean, it's basically holding pattern, I guess, till we get that clarity. Surabhi.
Absolutely. And that's the sort of, you know, fate of markets around the region as well. Very, very quiet right now, waiting for this storm to pass. By the way, yesterday, U.S. Treasury Secretary Scott Bessent, he said that whatever is going to be announced on Wednesday, the 2nd of April, that would be the highest tariff cap. And then he made the point that there would be some scope for negotiation downwards from there. So you declare the highest cap, and then if the reciprocal country is willing to kind of work with the U.S. and bring those numbers down, then you could see eventually lower tariffs. So that's the starting point, and it's the highest point at which things will kick off. And then, of course, we know now that this is going to be absolutely immediate. That highest tariff cap will be in effect immediately. No waiting for any new legislation on that. So Asian markets, what are they doing? They're just treading waters. Very, very quiet out there. Not too much movement. You're talking about a 0.25% up or down, depending on which market you're looking at. The Nikkei is flashing a little bit of red now. The Hong Kong market is still slightly positive. The Hang Seng, you can see there, it's up about 100 odd points at this juncture. There continues to be obviously that sense of unease in the market, which is why risk haven assets like the yen, they're continuing to be pretty well bid. The yen is still below 150 to the dollar. There you see 149.82. So it gives a sense of the unease that's playing out in the market. Okay, now for us, the issue is that the market here, the Nifty, has repeatedly been making lower highs. Last 4 sessions or so, we've been making lower highs ever since we hit the 23,800 marks. There's distribution in the large cap space that's very, very clearly playing out. The Nifty yesterday lost the 200-day exponential moving average. It lost the 50-day regular, the daily moving average as well. So the weakness has been becoming a little more persistent. And the VIX yesterday, by the way, it was surging big time because of all this uncertainty. Almost 9% rise on the VIX, and we are about at around just under 13, just under 14 for the time being. Now the flows picture, and this is the slightly more worrying part. March was a lot better. April so far not that great. I mean, Friday we had a big sell number of over 4,300 crores. Yesterday selling was almost 6,000 crores, 5,900. Domestic institutions, as usual, are offering some support, 4,300 odd. So the FPI selling resuming is a bit of a worry point. Not too many major stocks in focus. It's more global today in nature as we're starting with the overall setup. Coal India has hiked prices by about 10 rupees a ton for various varieties of coal. So let's watch out for that. Moil has hiked prices on various grades of manganese ore. By about 0.5% to 0.3%. So some of those PSU names, the miners, will be in focus. And by the way, I'll just end with the interesting comments coming in from the Parliament, from the Finance Minister in the Parliament yesterday on divestment, since PSUs have been such a flavor. I think it was in response to a question about the divestment target. She said FY25, we didn't put in place a divestment target because the government is taking a quote-unquote calibrated approach to divestment. And this gradual dilution in stake is also in the interest of minority shareholders. Remember what used to happen earlier? Suddenly an OFS is announced and then the stock would be under pressure, that particular PSU stock. That's not happening. And she says that's why we're taking a calibrated approach. So let's see. But yeah, Nigel, we have this volatile next 24 hours to navigate now.
Well, that's right. And the FI, the net selling that we see in the cash market, that's something that's making you a little bit uncomfortable. And what they've done in the last couple of trading sessions is they've unwound some longs and they've added some shorts. So that's what they did even in yesterday's trading session. Now the short positioning moves up to around 69% or thereabouts. But on a low base, both the FIs as well as the clients, well, they are piling on their respective positions. So if you look at the FI short positions, that's doubled, from the start of the series, just two sessions into the series. But that, in fact, has doubled. And even the client longs from very, very low levels, that's tripled. As of now, both of them, FI is net short and the clients net long on, on the index futures. What did the clients do yesterday? if you look at it, they were lightening positions, both on index futures, even on stock futures. But they seem to be playing this event big time via the options data. And that's precisely what it suggests. Just take a look at it. Massive addition on the call as well as on put side. But overall for the market, the PCR has come down, which is telling you that yesterday there were some puts that were written, they got unwound, and the calls, they got stacked up. So that's why now the PCR has come down to the lower end of the range. And just take a look at that. 23,400 call, 23,500 call, extremely active. However, the 22,800 put as well did see some activity. And going by this particular data point, which is the 23,400 call, which saw aggressive writing in yesterday's trading session, you get your near-term resistance that you're looking at. This is 23,450. That's the level that we're looking at. While on the downside, till the 20 DMA is protected, well, you'll say pretty much everything, is okay. This is the line in the sand. You don't want the 22,800 odd mark to get broken. On the Nifty Bank, two levels we're looking at. Yesterday, the 200 DMA got broken, which was a bit of a problem point because it got broken and we ended below that. The next reference point comes in at around the 100 DMA or thereabouts. The PCR, if it moves down to around 0.7 or thereabouts, normally we see a bit of a bounce. The 22,800 mark, that's extremely crucial going into the big event. So let's see how this plays out.
All right, no, it's a big one, and we'll see what happens.